corporations, as we discussed, also purchasing hundreds of thousands of Bitcoin, and governments purchasing, in our view, hundreds of thousands of Bitcoin. As this structural demand supply imbalance plays out in the market, it's exhausting the available supply. We think we're close to breaking out to new all-time highs. And when we do, we think, the market could run all the way up to 200,000. It would help if the US government announced net new purchases of Bitcoin for its US strategic reserve. It will help if we get passage of the Genius Act and maybe market structure regulation in the US. But even if those things don't happen, we think the demand from institutional investors and corporations and governments around the world are enough to lift this market much higher. It is just a fantastic setup for Bitcoin right now, with worries about the dollar, growing institutional demand. I think it's going to be a fantastic second half of the year.
Matt Hougan starts off by highlighting a significant shift in the way institutions now see Bitcoin not as a speculative asset, but as the cornerstone of a contemporary portfolio. Investors are looking for assets that offer both scarcity and worldwide accessibility in light of growing mistrust of existing financial systems, rising inflation, and geopolitical unpredictability. Hougan claims that Bitcoin is taking over that function. It's evolving from a tech curiosity to a significant factor in long-term capital preservation. The road to widespread Bitcoin acceptance is quickening as institutional infrastructure and the regulatory environment develop. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
Now, in a news release, Bitwise points out that as of March 31st of this year, 79 public companies hold a collective $57 billion in Bitcoin on their balance sheets. That's a nearly 160% rise over the past year. What do you attribute that bump to? And generally speaking, why do you think public companies are betting big on Bitcoin?
Yeah, I think there are a few reasons for that. We think this is a mega trend, by the way, that's going to accelerate into the future. One, of course, is increased worries about the dollar. Corporations globally are sitting on records amount of cash, and what they've historically done is park it in short-term US treasuries or, in fact, in cash accounts. But with the huge money printing and growing deficits, that no longer seems like a valid approach. They need another way to protect their wealth from degradation, and they're turning to the best horse in that race, which is Bitcoin. Beyond that, the investing audience has just recognized that this is a positive strategy, and so companies are being rewarded for taking this bold step of putting Bitcoin on their balance sheet. We think there will ultimately be thousands of companies that do this. We think we're in inning 1 or 2 of this mega trend period, but you're seeing it accelerate over time. It's very exciting. I think it's a massive deal. Look, for crypto to really reshape how the world's global finance works, which is the market we're going after. That's how crypto goes from $3 trillion to a $30 trillion market. We have to be at the center of how global finance works. We need to rest on a strong foundation. Right now, crypto regulation in the US, which is the world's economic center for better or worse, rests on executive orders and legal interpretations. There's no laws that protect it for the long term. If we look back at the history of technology, we've seen major laws set the standard that allowed for, technologies like the internet to grow and dominate the market. We need the same thing in crypto. And the fact that we made it through the Senate, at least onto the floor, we passed the most difficult hurdle, tells me that we're going to get there. If we do get there, I think we're looking at the longest and most sustained bull market that crypto has seen. I think it takes us up a major leg in terms of what crypto can do. Yeah, I think they're really two. The first is just because Bitcoin is volatile, when you add it to a portfolio mix, it doesn't increase the volatility of the portfolio overall because it's not correlated with stocks and bonds, right? That's the famous free lunch of investing. When you add a non-correlated asset, it can improve your risk-adjusted returns without increasing your volatility. But the other point I was making is something that I find when I talk to crypto native investors, which is that they tend to have very large allocations to crypto. And you might think that would increase the volatility of their portfolio, but they offset that by making the rest of their portfolio more conservative. Because they're taking a big bet on crypto, they don't need to take as big a bet on equities or on bonds. They can hold a significant amount of cash. And I think if you play with the ratio between the stocks, crypto, and low-risk bonds in your portfolio, you can create some really exciting returns, really dynamic portfolios. The old days of having 60% stocks and 40% bonds, I think those are over. I think people need to move to a new kind of portfolio that looks at stocks, cash and crypto and modulates the risk between them to get the kind of risk-adjusted returns that they're looking for. Yeah, we still are holding by that prediction. I think that's how the market is setting up. When we look at the market, Talia, we see a structural imbalance between the demand for Bitcoin and the available supply. We know the Bitcoin network only produces 165,000 Bitcoin per year. That's the full supply. And we see demand from ETFs, which are pulling in hundreds of thousands of Bitcoin per year. Corporations, as we discussed, also purchasing hundreds of thousands of Bitcoin, and governments purchasing, in our view, hundreds of thousands of Bitcoin. As this structural demand supply imbalance plays out in the market, it's exhausting the available supply. We think we're close to breaking out to new all-time highs. And when we do, we think, the market could run all the way up to 200,000. It would help if the US government announced net new purchases of Bitcoin for its US strategic reserve. It will help if we get passage of the Genius Act and maybe market structure regulation in the US. But even if those things don't happen, we think the demand from institutional investors and corporations and governments around the world are enough to lift this market much higher. It is just a fantastic setup for Bitcoin right now, with worries about the dollar, growing institutional demand. I think it's going to be a fantastic second half of the year.
Hougan eliminates a widespread misunderstanding held by certain investors, particularly with regard to businesses such as Bitwise. He clarifies that Bitwise is more than just a passive investment instrument or closed-end fund. Rather, it is a functioning, dynamic business. It has greater flexibility as a result. In order to expand and provide genuine value to its investors, Bitwise has the ability to issue preferred shares, generate revenue, and manage its Bitcoin holdings. To remain up to date on the most recent developments in Bitcoin, cryptocurrencies, and the digital economy, please take a moment to like this video, subscribe to the channel, and enable post notifications.
I'm still optimistic that we'll see stablecoin regulation in the US. It has bipartisan support, and more than anything, the US government actually needs it to pass in order to continue to fund the government. Remember, stablecoins have become a major purchaser of US treasuries, and the government is on pace to issue more and more treasuries, more and more debt. So I think smarter heads will prevail. I think we'll get this through the Senate. I think we'll get it through the House. I think it will be signed by the president. And again, I think that will set the stage for a major bull market in crypto that could extend for multiple years. Yeah, as you mentioned, I can't speak to our specific filings, but I can say that I think the SEC is moving in the right direction. If you look at what's happened since we launched Bitcoin and Ethereum ETFs, all they've done is that they've lowered the cost for investors and increased the security, right? We've dramatically reduced costs. We've dramatically improved security. They've been a net win for investors. What that tells me is that we can go further down the spectrum to these other alternative assets that people want exposure to, that they're currently buying exposure through centralized exchanges, which may have high fees and security risk. Why not allow them to access it in a safe, secure, low-cost ETP format? There's no guarantee that we will get there, but if we're reading the tea leaves, we're very optimistic on many of these alternative assets. Not every crypto asset needs an ETP or should get an ETP, but we think investors want and should get exposure to more assets than just Bitcoin and ETH. And I do think we're going to get there towards the end of the year. The SEC is very constructive. They're open to discussion. It's a breath of fresh air, and we're really enjoying it here at Bitwise.
According to Matt Hougan, Bitcoin is at the center of a significant change in the way businesses and institutional investors approach portfolio building and capital preservation. He argues that businesses all throughout the world are reconsidering their cash storage practices. They have historically depended on short-term treasuries and U.S. currency. However, those conventional approaches are now beginning to appear dangerous in light of skyrocketing deficits, excessive money creation, and mounting concerns about the viability of the U.S. dollar. Consequently, a lot of businesses are using Bitcoin. He thinks that a long-term worldwide trend is just getting started. We may be at the first or second pitches of a massive trend that may eventually see millions of businesses include Bitcoin on their balance sheets. Protection is no longer the only concern. Markets are rewarding this audacious approach, demonstrating that Bitcoin investing is not only wise, but also validated by investors. Hougan also stresses how crucial regulation is. In the United States, cryptocurrency still has strong legal underpinnings and is mostly dependent on executive directives and evolving legal interpretations. He makes makes the case that comprehensive crypto regulations are necessary for long-term growth, citing the internet as an example, which only thrived with regulatory clarity. Hougan thinks that the latest developments in the U.S. Senate are encouraging and might spark the longest and most persistent bull market in cryptocurrency history. Lastly, Hougan highlights a significant mismatch between supply and demand in the Bitcoin market. Although the network only generates roughly 165,000 BTC annually, governments, businesses, and ETFs are requesting far more. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.